Folks, Todd at GPAgency here. Did you know that May is Disability Insurance Awareness Month? Well, we here at GPAgency couldn't think of a more appropriate time to host a webinar for our agents. So after this video, you can expect to gain the following. You're going to learn about our product design, our marketing and sales ideas, and also the carrier products and the sweet spots. So stick around for our disability insurance workshop coming up.
My name's Chris Carrigan. I've been in the insurance world for 30 years. Started with a company called Paul Revere. They were bought out by Provident and bought by Unum. When I first started in the business 30 years ago, there were over 100 carriers. And today there are roughly 11 or 12. And my understanding is another one will be stepping out of the arena. So who sells disability today? And the one thing I'm going to try to train you on is not to call it disability insurance anymore, call it income protection. Because a lot of folks that think of disability insurance think of somebody in a wheelchair. And the reality is most people are not disabled sitting in a wheelchair. We're going to have some stats on where the likelihood of disabilities occur. We'll go through a lot of that. But I want to hit you with a lot of sales ideas today. And we're going to try to accomplish this in about 20, 30 minutes, maybe have a little Q&A. You know, those people that are selling income protection today, the average age is 58 years old. So the new guard of agents has not hit yet. Why is it so old that those that are producing it? Is when I was in the business early on, there was a Provident rep, a Unum rep, a Connecticut Mutual rep, there was a principal rep, and they were local, and they were calling on all the agents. So they were making a lot of awareness in education. So they were letting their, going out to talk to the consumer, and they were highly, at least informed on what to say. So today that's gone. They have one rep for principal that covers 2 states. MassMutual has one that covers 8 states. So that expertise in local area has just gone away. So what I'm going to try to do today is just make you a little bit more comfortable selling income protection and go through a few stats. Number one thing, a lot of people are confused on how much this should cost. So the one thing I'm going to beat into your head here today is I want it to be less than 2% of your gross earnings. So what that means is if you make $100,000 and your client says, yeah, I make $100 a year. I had looked into income protection before, but it was way too expensive. We'll try to say it's going to cost around $1,500 to $2,000 per year to cover 60% of your income. So that's pretty simple. You're at a cocktail party. Well, once the pandemic's over here, you'll be at one again. But those folks that just ask you and say, what should this cost me? 1 to 2% of your gross earnings. It's pretty simple. So what I want you to do though, is also keep it simple. There's so many different riders that you can add on contracts today. So I want you to get comfortable talking about a 90-day elimination period. Let's say you get disabled 3 years from now, you have to satisfy those 90 days before it kicks in. And remember, you don't get your first check to the 120th day. So that's quite a long period of time. If you can extend it out to a 180-day elimination period, but it drops the price a little bit, but think about it, you're not going to get your first paycheck for 210 days. So first thing I want to focus on a 90-day elimination period. And then some of the carriers today have gone to a 10-year benefit period. We used to just sell everything 90 to age 65. That was pretty standard 30 years ago. Now today they've opened it up to age 70 benefit periods, to age 67. They got a 10-year, 5-year, 2-year, so that you can pick and choose whatever you want. But I want you to stick with a 90-day wait, 10-year benefit period, and just show $1,000 a month benefit. And you're going to say, well, that's not enough. If you've got a gentleman making or a lady making a couple $100,000 a year, just sell it in units. So basically just dumb it down. So for a 40-year-old, $1,000 a month policy, 90-day wait, 10-year benefit period, costs around $30 a month. And then that client may say, well, that's not enough, Chris. I need 7 times that. Well, what's 7 times that? It's pretty much how you let them walk it back in. Just keep it simple, keep it simple, what. The other thing I want to talk about, like I was saying, in 1990, there were over 100 carriers. Today, there's 11. So you get some white collar carriers, you got some blue collar, you got some gray collar, and then you got Lloyd's of London that sort of takes all the specialty stuff. And here at GP, we insure about 300 professional athletes. Sort of cool when you're getting into that, race car drivers, and but anything, anything that you can think of, we've pretty much insured. The one thing I also want to stress is if you do not currently own a policy yourself, it's tough to sell it. So about 29 years ago, This gentleman that worked at Prudential, I was training them on selling the disability insurance or income protection. And he goes, well, where's your policy? And I didn't own one at the time. So I ran home, wrote one out on myself. A month later, I ran back into that office. I'm like, oh, I'm here to show you my policy. He's like, forget it, whatever. That was my first policy with Paul Revere. I currently now own 4 policies. I've got 5 daughters, so I need quite a bit of protection, and I hope I never use it. That's one thing, you're already selling an intangible. People don't think it's ever going to happen to me, and but God forbid something bad does happen. My next door neighbor brews some great beer. Yeah, he's a musculoskeletal radiologist, brilliant guy. I mean, the guy's talented in so many different ways. And last fall, I said, Doc, how was your evening? And this was on a Saturday in September or something like that. And he said, oh, it was awful. And he said, all these guys drank some beers, climbed up on their roof, and were trying to clean out their gutters, and fell off the roof. And I looked at more broken bones than that I can care to talk about. I was like, all right. So later that day, we had a couple of his home brew beers that are right around 9 or 10%. So if you know what those are. A couple hours later, where do I see him? It's like that picture on the right there. He's on his roof. This guy is a musculoskeletal radiologist. The night before, saw all these accidents, and he says, it's not going to happen to me. And that's what most people think. This is not going to happen to me. So you have to educate your clients on this. Explain, you hope this never happens to you, but out of 100 claims, 92% of them are due to a sickness. So it's not very common to go out after 90 days or 180 days, go out on claim due to an accidental disability. So just make sure you tell your folks that. So here's a couple of 1 in 4 of today's 20-year-olds can expect to be out of work for at least a year because of a disabling injury. So freak accidents do happen, but majority are due to accident. It wasn't working. So here you can see muscles, bones, disorders, 28% are common causes for disability, cancer 15%, accidents right around 10%, cardiovascular, and mental disorders. But mental disorders stay on the books quite longer. They add up to about 22 cents on every dollar of claim due to the damn clause, we call it, drugs, alcohol, mental, nervous. 60% of people who file for bankruptcy do so because of health crisis. I mean, think about that. I had an old gentleman teach me this trick. He had pulled out his business card and he flipped it over to the blank side. He said, I want you to do me a favor. In the event you got sick or hurt, couldn't work, I want you to list 3 people that are going to help pay your bills. And I thought about it. I'm like, so I get the pen in the hand and I'm thinking about it. And I'm like, you got your parents. At the time I was younger, but there's that very few. So he flips over this business card and says, that's what I do. And I thought that was sort of cheesy, but sort of cool. And he's there to help out. He sold a lot of income protection over the years. The other good sales idea, this is the easiest one I can show you to that. If you have a client that's 55 years old or around there, or 60 years old, those old policies that we sold, you can go back to the carrier and say, hey, I want to reduce my age 65 benefit period down to a 5-year. So if you're 60 or 5-year, or if you're 55 and they do have a 10-year within their portfolio, it drops the premiums in half in some cases. And then you want to pull these riders out, the future insurability options that you can't really exercise anymore, or the cost of living increases. So you want to get rid of those riders and trim it down, maybe with a savings, buy more coverage, or start having the conversation about long-term care insurance. We sell a lot of LTC here as well, and it's basically DI for older folks. And we've had a lot of success just making the switch over there. The other thing, why do we do this? Obviously, we want to help our clients. But like I said, I've been doing this 30 years, and my renewals are killer. So, when you sell life insurance today, especially term insurance, it's heaped commissions. So you're looking at roughly 100% first year, 90 to 100. If you're a career agent, it might be a lot less than that. But then your renewals on term, 0 or maybe 1 or 2%. With income protection, typically your base comp is going to be around 60%, 70% if you do a lot of volume. And then your renewals could be as high as 20% for the next 9 years. So you do a year after year after year and putting 30, 40, 50,000 of premium on the books, it adds up to be quite a bit. And the average person that buys from you will buy 2 more times. So you'll keep adding on to that income protection plan up 3 more times. So it is huge. That's a gift that keeps giving. And people, once they have their policy in hand, you're almost in an accident on the Beltline or, on 95. You think about it and say, well, I'm glad I have that policy. Or your heart starts skipping, you're not feeling exactly 100%. You say, well, I hope I don't use this plan, but I'm glad I have it. So, that's the different thing with income protection. Like I said, keep it simple. You don't have to throw all the riders on. You can have own occupation as a rider. And that's probably the most oversold rider there is in disability insurance. Unfortunately, a few years back, I did sell a resident who was a surgeon here in North Carolina. He was just signed his job, so we wrote him a $10,000 a month policy. He's in his woodshed. Before he even started his position, his dog jumped on his back and he cut the 4 fingers off of his hand. Can't even make this up. So what do you do if you're a physician? You run inside, go get a bag of ice. He comes back, yep, the dogs ate the fingers. Pretty gross, but it's a true story. So what this gentleman did, he had a $10,000 policy that's going to pay him till he reaches age 70. So, and he was only 31 or 32. So he went back to school and now he's becoming a radiologist and read film. So the ONOC is important for occupations like that. But for me, being in insurance sales, I can't do anything else that's any good. So this is what I'm good at. If I lost my ability to speak or anything like that, but I'm not talented anywhere else other than my experience with selling insurance. Just make sure that you keep it. If you've got a white collar professional, you want to have a non-cancelable guaranteed renewable contract. What that means is they can't raise the rates. You buy this at age 30, when you're 60, those rates cannot go up unless you buy additional coverages. That's probably the most important feature in there. If you get some gray collar, blue collar workers, they go into the guaranteed renewable contracts. And that's more like Illinois Mutual, Assurity. There's only 3 now. One thing I will tell you about Illinois Mutual is I like them because they have a return of premium right. So they're one of the last ones left that had that. For those of you that are a little older, Pan American had a great one. Paul Revere had a great one. So where are you going to get income if you become disabled? So if one of your clients says, hey, if I get disabled, I'm covered at work, Social Security. Now my brother filed for claim. He got diagnosed bipolar paranoid schizophrenia at age 38, and he's no longer able to work. Just hit him late in age. Crazy. He can't work, and they still deny him. So Social Security disability benefits, if you ever looked at what acceptance is, very few. If you're covered at work, the one thing I love it when people say, yeah, Chris, I'm covered. I've got plenty of coverage at work. I'll say, send me your plan. And you can, if you have a client and you're not sure if they have enough coverage, you can send it to us and we're happy to do a full review for you. But a typical group plan only covers 60% of your income and typically only your base salary. So 60%, and I have 21 employees here. I provide each of my employees group LTD. So the good news for them is I pay for it. The bad news for them is I pay for it, because what that means is if they were to become disabled, it would be taxed because I'm taking a write-off on that. So there is opportunity to put additional coverage on top of group LTD to get you to roughly 75 or 80% income replacement. So don't let that roadblock stop you. So other sources of income, where are you going to get money? Like we said, vacation time, spouse's income, family or friends, savings. I don't know. One of my neighbors was a lawyer, a trial lawyer, and he was walking down the hallways and he kept walking into the walls. And Eric was only 40 years old, and they, quite honest, they thought he was drinking, and because he was getting really sloppy. Well, come to find out, he was diagnosed with MS, and he was worked out all the time, everything. Now he's wheelchair ridden, but he had 2 big DI policies, one group and one individual, that's taking care of him still today. We're fortunate that we took care of him, and he's got adequate coverage. So it's tough to hit up family and friends. Make sure that you're at least talking, having the conversation with your clients. Ohio National has a great thing in their illustration. If you've ever, Ohio National getting some bad press right now, but in the back of their proposal, they have a 1-pager, and it says, hey, Todd's sitting next to me, Hey, we discussed income protection. You decided you didn't want it. Will you sign this, please? So I can keep it in your file. So I know in today's litigious society, I'm not going to be on the hook for it. So they'll say, well, what am I signing here? And it actually brings up the great conversation again, gets you going. So, if you don't sell a client enough life insurance and they die, they can't call you. If you don't sell them any or not enough income protection, who do you think's the first person they're going to call and say, why didn't you go over this with me, Chris? So I make it, every client that we have here, we make sure that's a number one conversation. Hey, in the event you get sick or hurt, just ask all your clients, in the event you get sick or hurt, how are you going to pay your bills? And then just shut up and let them answer that question. And then you fill in the holes, fill in the gaps. Everything revolves around your ability to earn an income. And we can't stress that enough. The other one, this is a great one, and for 2 jobs. In job A, I'm going to pay you $100,000. But if you got sick or hurt, I'm going to pay you nothing. Or you can take job B, and I'm going to pay you $98,000 a year. But in the event you get sick or hurt, I'm going to pay you $60,000. Everybody I've ever asked that question to says, of course, Chris, I'm going to take job B. Well, then you say, well, why won't you pay these premiums for income protection? It really works that simple. If somebody's really fighting you, educate them. Like I said, most people don't feel it's going to happen to them. They can go out and buy their new BMW instead of buying an income protection plan. You just want to make sure they keep that roof over their head. You can call it mortgage protection. You can call it anything you want to call it. But once again, like I said, keep it very simple. Keep it at 90-day wait, 5 or 10-year benefit period. The average claim lasts about 3 years. When I first got in the business, the claim lasted about 2.3 years. Now with all the medical advancements, it's right around 3 years. So if you sell somebody a 5-year benefit period, at least they can get this stuff together, or 10-year benefit period. So I typically like to, I'll show them the 10, and if they can go to 65, 67, or 70, we work with a lot of physicians. There's about a 97% penetration rate. What that means is physicians know they need this coverage. Dentists are number 2, trial attorneys are number 3. Average Americans, less than 3% of the country own any individual disability insurance, less than 3%. So just about everybody you talk to that's not a physician does not have coverage. So that's the thing that we lead with. Hey, here's a mortgage. It's $1,000 a month, $2,000 a month. Keep it simple. Don't put all the riders on it. And then as they get more comfortable with it, then you can start adding those back in. A couple of things that I like to hit on. We've got a new carrier called Emeritus, you've probably heard of, but they have 2 riders on their plan that I like to highlight. They have a good health benefit. So let's say you had a 90-day elimination period. So every year that you don't go on claim, they knock 2 days off the elimination period, which I think is pretty cool. So you're 40 years old, you bought it with a 90-day wait. Now you're 50. Now you're going to only have a 70-day elimination period. Very cool. They also have a non-disabling injury. I was down in Charleston, South Carolina a few years back, and I was eating an oyster, and it had a pearl in it, and I cracked my tooth. Well, that cost me about $4,000. Their disability policy will pay 50% of your benefit, up to $3,000 per occurrence, for non-disabling injuries. So it's sort of like an Aflac Colonial built into their DI plan, which I really like. You utilizing it. You've got another carrier, MassMutual. They pay dividends after year 5. And as I mentioned before, Illinois Mutual, they have a return of premium. So we also have Standard, we have Guardian, we have MetLife on the guarantee issue side. So if you do work with any groups, we can do guarantee issue. So if you've got that one business owner and 5 execs, they'll do it down as little as 5 lives. So you want to talk to them about that if it's employer pay. On a voluntary group, they typically want groups of 75 or more, earning at least $75,000 per year on average. We can work with those groups as well. We'll help you enroll them. It is pretty soup to nuts here at GPAgency. We'll set you up with the right carriers. Like I said, around 1 to 2% of your coverage. Disability income protection is not health insurance, workers' comp, or life insurance. A lot of people just confuse it. They don't even know it can be purchased. Back when I started, it was roughly 600,000 individual policies were written in 1990, I believe. And then there was a number, it was like 200,000 individual policies written a couple of years ago in a given year. So as the old guard, people say, the underwriting is such a pain. I got to get financials. I got to do all these things. It is a little more difficult to write income protection, but you're 3 times more likely to become disabled than die during your working years. You better at least talk to your clients about it. You better own it yourself if you're going to promote it. Does anybody have any questions for us right now? If somebody that wants the PowerPoint to study, we'll certainly send this along to you. So what we're going to do is a series of these. And if you want to learn more and really dive into it and what non-can guaranteed renewable, how cost of living works, how future insurability options work, how catastrophic, should you have that on your policy? Should you have residual? That's the one rider that I almost make mandatory on every policy that we write out of this office. So what that means, if my father-in-law had a stroke, so he was disabled, he was out full-time for 4 months, and then his doctor said, yeah, you can go back work partially. So his policy paid him partial benefits. So 85% of all claims go through residual or partial. Each carrier calls it a little something different. So I'd like everybody to have that rider on the policy. You just don't want a total only, because that's not really likely to occur. There's new riders, like I said, we're going to chat here. Are there good groups that would be considered difficult to put this in place? High-risk jobs. Yes. Like I said, we fortunately have 11 carriers in Lloyd's of London. They will accept a lot of our folks that are not, white collar, even blue gray. You think about anybody that scuba dives deep. DI carriers do not like that. Anybody that swings a hammer on a roof, they don't like those. But we have carriers that will insure them. So it's all across the board. Like I said, physicians are the ones that, if you really want to go after, they're the ones right in school that will buy it. So you can get to the local university, ask, we can offer discounts. Typically carriers at 3 lives will give a unisex rate and 15% discount. How that works is, because females pay roughly 40% more than men. So picture a female's rate here, male rates are here. They go to a unisex rate, which is raises male rates about 10%, and then they knock it down 15 from there. So females, if they can get this unisex multi-life discount, they're saving roughly 50%, and it's permanent. So if they ever leave the job or the job leaves them, they can take it with them. It's great with real estate attorneys, because there used to be about 90% female. We're seeing more and more men join into real estate, but that's a great industry to go after, because they don't offer any benefits typically. So, and they need it. They're on the road a lot. So I think that's an area that's been underserved. I think this year with the pandemic, there was an article I read that said DI sales are going to be up 50% this year. I don't think that's the case yet, because when the PPP money runs out and you kept all these people employed, and they'll forgive that money if you keep them employed. Once they get forgiven, I think they're going to go to 1099 employees, and you're going to be working out of your home now, more and more people with no benefits. So they're going to be out there looking on their own. So we got to figure that out, how we're going to fill that need and find these folks. I really believe that's going to be the future of income protection there. What other groups, like I said, attorneys like to buy it. We've got one group here in town that we're 50 radiologists. We just did a guarantee issue group on. So we were able to get $10,000 a month guarantee issue. So no questions asked with GI. So those are great groups, and they stay on the books. I've used my 30 minutes. Let's see if there's any other chats. Oh, that's a great question. Is there anything available for a stay-at-home spouse? It's funny you say that. It's a good question. Emeritus has one. It's a lump sum benefit. So they have to be, it's either a $25,000 or $50,000 policy. And we do that with a lot of physicians. Their spouse stays home, takes care of the kids, but they're crucial. Like with me, I've got 5 daughters. My wife comes to work, but she's really the caregiver at home. So, but they are unique to having that coverage, emeritus. So give us a call on that if you want a quote. We'll be happy to turn around for you. I like that slide too. Who needs it? We'll write someone as low as 18. Typically, you're writing somebody when they have the life event, they have a child, buy a new house, which seems to be, the real estate market's going crazy. You might want to go after an association and market. You can get discounts on associations. So there's a lot of things that we can help you with as far as marketing goes. We have a marketing guru we brought on out of Charlotte that can help you with your social marketing on your Facebook, LinkedIn, all those things. If you're having a tough time getting in front of folks, we have a number of ways to get lists for you. We're here to assist you. I know you get the tough job. You got to go out and hunt. We're here to cook and clean it. So, we're here to support you in any way possible. And we've been doing this. My firm is 52 years old this year, same age as me. Angela and I bought it about 17 years ago. She's a guru in underwriting. Oh yeah, that brings up one last point. I have a one-pager that I'll send out as well. It has the top 100 causes of disability. So if one of your clients gets an exclusion put on their policy, because remember in DI, they can come back and say, we're going to exclude your left eye or your back or whatever. Well, I get this one pager and I'll put it up and say, here's 100, and I scratch out the one reason and say, but you're covered for all these other 99. This old guy taught me that one years ago. It's the best way to place a policy that has an exclusion on it. So we're happy to share all these ideas with you. Anything else, Tom?
Yeah, Judy, thanks for the question. We're glad you made it. In the event we can get this recording saved and send it to you, we'd be happy to do so.
All right. Well, thank you, everyone. We appreciate your time. And give us a call. You need a quote, you need a question, you need a full review on one of your clients' policies. We're happy to, just help out in any way. All right, everybody. Appreciate it. Have a great week.
In closing, I just wanted to thank you for stopping by and watching our disability insurance workshop. If you liked the video, how about giving us a thumbs up? And if you didn't like it, well, you have another choice. So it's up to you. For more information, check the description. GPAgency would love to have the opportunity to step up your game. So until next time, God bless and happy selling.